There's a battle happening at ONDS stock. Somebody's about to get crushed because in the last few days, two major things have happened. ONDS diluted shareholders over the weekend, but at the same time, they just landed a $68 million order tied to a larger $140 million program this morning. So the question is, what matters more, the dilution or the momentum? Because one side of this trade is about to be very wrong. So let's break this down quickly. ONDS just announced a $68 million order through its subsidiary, Indo Earth Moving. Ondas receives $68 million order under a $140 million strategic military engineering program. It's basically, these are heavy machinery vehicles designed for defense environment. But here's the twist. ONDS is integrating AI, autonomy, and mission systems in these platforms, essentially turning them into intelligent robot systems. This is how it's kind of going to look like. Now, this video, somebody's actually driving this vehicle remotely, but Ondas is actually going to use autonomous systems, probably from Palantir, to actually drive it by itself. Yeah, it's kind of interesting. So now you got two completely different signals hitting the market at once. One side, you got real revenue and execution, and on the other side, you got dilution and risk. So that's why this stock is turning into a battlefield. Let's start with the bears, because this argument just got stronger. ONDS is still not consistently profitable. Google saying that Ondas has experienced significant aggressive stock dilution, including a 200% shareholder dilution through early 2026, driven by capital raises and acquisitions in the drone and automated data sectors. While diluted to existing shareholders, management uses these shares to fund growth over $1.8 billion in gross equity raised since 2025. Ondas has experienced aggressive dilution, roughly 200% shareholder dilution through 2026, which means share count has expanded significantly and existing shareholders now own a much smaller piece of the company than before. The company has raised $1.8 billion in equity since 2025, using that capital to fund acquisitions and expansion. They've also absorbed multiple companies over a short period, which helps growth but increases dilution. So from a short seller's perspective, this isn't a small issue. This is the issue, because every time new shares are issued, it puts pressure on the stock and raises the risk that it could happen again. Shorts aren't just betting against a story, they're betting that dilution keeps winning. So here is Indo Earth Moving, and this is the news at Indo Earth Moving. Ondas receives a $68 million order under a $140 million strategic military engineering program. So here's where things get interesting, because at the same time, the company just landed a $68 million order, and this isn't just a random contract. This is the first phase of a $140 million multi-year program through Indo Heavy Machinery. It includes delivery of systems with additional revenue expected from maintenance, support, and future expansion. Deliveries are expected to begin in the fourth quarter of 2026. So this is not just a headline. This is the beginning of a long-term revenue pipeline. This is interesting. The program enables us to begin deploying ground systems today while creating a clear roadmap towards autonomous and remotely operated capabilities for these platforms. By combining Indo's deep expertise in heavy engineering vehicles with Ondas autonomy architecture, sensors, and mission systems, we are enabling safer and more effective operations in complex environments and advanced integrated capabilities across air and ground domains. which I'm sure they're going to use the Palantir networking systems to the software and implement it into the Indo heavy machinery. So let's go to, this is exactly why the bulls are still here, because Ondas is evolving into something bigger. This is no longer just a drone company. They are building a multi-domain autonomous defense platform, combining aerial systems, ground systems, and AI-driven mission control, all into one ecosystem. And in a world where defense spending is rising and autonomous systems are becoming critical, that positioning matters. So bulls are looking at this and saying, yes, the dilution hurts, but if that capital allows the company to scale, land contracts, and execute, then this could be the early stage of something much bigger. So now we get to the real question, because this is where the battle actually is. On one side, you have aggressive dilution, 200% expansion in shares, and over $1.8 billion raised. And on the other side, you have real contracts. You have a $140 million program starting to execute. So which one matters more? Because both sides now have real ammunition. And when that happens, that's when the stock makes their biggest moves. So right now, Ondas is no longer a hype story. It's a prove it moment. Shorts are betting the company won't execute. And the bulls are betting this is just the beginning. And the truth is, both sides have a case. But the next few catalysts are going to decide everything. Here's what I'm watching closely. Do more orders come from the $140 million program? Does the company show real revenue growth? Can they execute on delivery starting in 2026? And most importantly, does the market start believing that this is more than just a story? Because if follow-on contracts hit, this narrative changes fast. So how is this going to play out? The shorts are getting crushed. If more contracts are announced, revenue starts growing, and the momentum builds quickly. Let's look at the short float. Here, hold on one second. Short float is at 35.86%. So this is short interest, 114.2. Short interest is 164.35. The short float percent is now at 35.86%, and the short ratio is at 1.70%. So that's a fairly high number there. And the bulls get crushed if more dilution happens. Execution disappoints and the pipeline doesn't convert. And that's why this setup is so volatile. So interesting, and so very interesting at the moment. The bears have the final argument here, or they have a real argument here. Dilution has been aggressive and the numbers don't lie. And the bulls finally have something real to point to. They have actual contracts and they have execution starting. And when those two forces collide, that's when stocks either break down or they break out. So now I want to hear from you. What matters more, the dilution or the $68 million order? Are you on the bull side or are you on the short side? Drop your thoughts in the comments. And if you want some real-time updates on plays like this, make sure to subscribe and like the video, because we're tracking this one very closely. We'll see you in the next one.